debt. And what you're going to continue to see is you're going to see precision opportunities in the portfolio. So people are going to be able to exercise very precise exposures. Do you want access to AI memory only? Boom, you can buy that in one ticker. Do you want access to emerging markets in just Thailand? Boom, you can buy that directly. Do you want access to emerging market debt? Who owns emerging market debt? Like, you probably are not even focused on that, but you can buy that. So the ETF is going to allow you to have more precision in your portfolio, to build a more dynamic portfolio that will allow you to express yourself and actually hopefully diversify and meet your investment objectives.
I love it. I always look at ETFs as like the variety pack, right? Like when you have, Halloween and everybody coming to trick or treat. We ain't had that much money growing up, so it wasn't like we was buying, a shelf of Snickers or Hershey's. We would get the variety pack, and that's a little bit of everything. And that's why I really look at ETFs, because why I love it for a portfolio, especially for a person that's just starting out, you're gonna get that inherent diversification, and you don't have to be right. Right? You have the ability to own, several names where some will actually offset some of the other ones that are, maybe underperforming. So I love ETFs. And I think that, as we have grown and ETFs have become an even hotter commodity, so has, people wanting much more, high octane, people want to make a lot of money real quick. If you want to make a lot of money real quick, raise your hand. And due to that reason, we have something called leverage ETFs. Anybody have ever purchased a leverage ETF? And so I really want to break that down, because in our culture, right, we largely because, we don't come from generational wealth, we're in a hurry to get there. Right, and I think when I go and I talk to people in, underserved communities, I tell a person right now, hey man, just dollar cost average, buy the S&P 500, put $200-300 in there every month, you'll be rich in 30 years. And this kid is currently in survival mode. Bro, I don't got 30 years to wait to get rich, bro. I'm trying to get rich tomorrow. And so what happens in our society, and you see it with everybody trying to, hit a 15-leg parlay. But even in the stock market, right, we see certain people buying call options on leverage ETFs. So let's break that down real quick, man. What are leverage ETFs? And let's talk about the pros and the cons of it.
So I'm going to tell you why I'm qualified, I think, to have this conversation.
Whoa. No, your name was all little. You up here with this suit.
No, stop.
We was talking back here, and we talked about how you look like ghosts. We know you qualified, but let them know why you qualified again, my dog.
So my firm and my role is very important. So I'm the global ETF strategist for a firm known as Direction. Direction, for some of you who have purchased leverage or inverse state ETF in the past, you might have heard of the ticker SOXL, SOXL, which is a triple leverage semi.
And I done made some money on SXL. You did.
So a lot of people know us for those types of products. But what we are is we're an innovative firm. And what I do is my job is to sit between marketing, sales, and product development, and to commercialize the stories of some of these complex trading investment vehicles. I want to be very clear. Anybody who is purchasing a leverage or inverse product, these are daily trading investment vehicles. I'm going to say it again. Daily trading investment vehicles. So if you are, the way that we've constructed and built these products, and we are not the only provider in the market, we're a top 2 provider, we're a top 20 asset manager, but the way, or the reason that we initially constructed them, and I'll tell you a little bit about them in a second, but I just want to level set, is they were created during the financial crisis to again, exercise precision trades in the market. Today, people are leaning into these trades because, again, a lot more people have access to trade and invest, but really you guys understand technical analysis, you understand fundamental analysis, and now you really want to set up and lock in. But some of you may not have the ability to get margin. Margin is expensive. They also do margin calls, so that blows up some trades. So you can actually leverage ETFs to actually get exposure, in many cases 2x or 3x exposure, meaning 200% or 300% exposure to a single stock name and or a sector. So here's what leverage and an inverse is. Leverage is, we basically use swaps, which is a type of derivative. Don't go too crazy. It's just a bank instrument that gives you exposure to the underlying asset. So what people have seen is you see an index, like the semiconductors, and that's what SOXL is. And we basically give you 300% daily exposure. There's risk associated with that. But let me just say the pros really quickly, and then I'll say the risk. The pros is if your technical trade sets up, and then you want 300% exposure, and you're ready for it, and the trade hits, and the market goes up 3%, that index. Well, your product has a 3x exposure, well, that product is going to go up basically 9%, giving you 3x exposure to the 3%. However, if that trade continues the next day, you get another 300% because it's a daily reset. On the inverse side, or not even on the inverse, on the flip side, if that same trade goes against you and goes down, well, you're going to go down 3x on the way down. So that's why the leverage cuts both ways, so it's a lot of risk associated with it. So that's why they're designed and used for sophisticated traders. And if you're making an inverse trade, that basically means you're betting that the market is up. You have a bear setup. You think the market's going to go down, so that way your product is designed to go up. Does that make sense? Okay, good. And basically those products are only about a 1% exposure of the entire market, meaning there's $15 trillion in ETFs. Leverage and inverse is only about $250, $300 billion. So it's really small, despite the headlines that you see.
That's powerful. I got a question, man. How many parents do we have in the building? Okay. I think y'all can all agree with me that, they don't make grandparents like they used to. My mama, she got a life now. She be outside. I'm probably trying to watch the kids. Boy, I done did my bid already. You go to yours now. But I bring that up because that's something that we have in common. And as parents, right, when I think about managing money, as I think about investing, it hit different because every dollar now I look at it as an opportunity cost, right? I look at it as saying either I could go, the Turks and Caicos, or I can fully fund, I got 3 kids, by the way. These 529 accounts for my kids, but talk about how you approach investing in, managing money as a parent now.
Look, Ross, honestly, man, I think you've done a phenomenal job with your platform of at least bringing your kids in the fold of having the conversation really early about financial education and it being, a foundational narrative in the household. I feel like when I grew up, and probably many of you grew up and you learned bills faster than you learned assets, and I know that was the case for me. However, helping a kid have a narrative where they understand assets and or investments just as early is a game changer for our community. In many cases, you all are first generation folks who are creating wealth. So I have a daughter. When she was born, the first thing that we did is we put money in a 529 plan. Also, we put life insurance on her. Also, we made sure that I had a side policy that was just for her. So she has a foundation and a framework built for her. And I think the way that our community needs to actually embrace that conversation for investing in our children is it's a non-negotiable. It is table stakes. It is almost like mandated. And if your family, your friends, if they're not doing that, I'm gonna tell you a real personal story right now. My father died, my biological father died 2 months ago.
Sorry.
Thank you. And I'm in the business and he didn't have life insurance. And he had no investments. And I'm in the business. And I didn't have the conversation with him. I sit there and I look at you all, you probably sitting with your friend. If you're not having real authentic conversations with the people next to you, you are wasting your time and you're doing yourself a disservice. And that means it goes directly for your children as well. So I want to make sure that we stress the significance of investing in our children and pouring into our babies, just like you do with your show and how you wrote books. You build that narrative from the foundation, because it is a non-negotiable, and I hope you guys take that to heart.
That's a mic drop, man. I think, thanks for noise for that. And obviously, my condolences. I think in our culture, right, I think we shy away from the things that we don't know or we have a little anxiety about. And I think the biggest buzzword ever is generational wealth. Generational wealth. Everybody and their mama use that word. Oh, I'm building generational wealth. But what people don't understand is that to truly build generational wealth, we have to first overcome those past generational traumas. And in our culture, right, we inherit our parents' lack of, money knowledge, right? If our parents or our grandparents had a bad relationship with money, guess what? Chances are we inherit that, right? If after, a certain time, your mama told you, hey, don't answer that phone call, it might be a bill collector, well, guess what? You subconsciously are now saying, oh, well, Fannie Mae ain't gonna get this, or I'm gonna just keep paying the minimums on my credit card, right? There's so many things that we inherit that you don't even understand. You just learn it through osmosis, and that's why I have my platform. If you don't follow me, I'm at Raw Smack, but I have a 5, 4, and 3-year-old. Every morning I talk to him about what's going on in the markets, because to his point, we so comfortable talking about, who gonna win the championship this year? Oh, is it the Sixers, or is it the Bro, we gotta have the same conversations about, investments and also life insurance, right? And this is a great point, because I also had that conversation, right? I actually recently had my license to sell life insurance, right? Collecting infinity stones. But I think it's important that we realize that. And so this conversation is sponsored by State Farm, and I think that when we talk about some of the things State Farm does, life insurance is one of those things. And I think that in our culture, I hate when I get on social media and I see a GoFundMe. How many people get on social media and see somebody that went too soon and they see a GoFundMe? And if we're not having those conversations, right, I think we all underestimate, or better yet, overestimate the cost of life insurance, right? You can get $1 million policy for about $60 a month. Something like that is baffling. But if I go to the club, I'm buying a drink for myself and a young lady, and I'm married, so this is just hypothetical. But that's $60 right there, right? You know what I mean? And so it's haircuts cost more than 60. And so when you start really putting things like that into perspective, I just really want to implore you, because that was a very powerful point that you made. It's like, normalize having those tough conversations.
So let me give you a number on this. So GoFundMe raises about $330 million a year in memorials.
Wow.
$330 million. They flip about a 3% rate of return, and I think they charge you like 30 cents per transaction. But just think about the gravity and magnitude of that. Basically, people have deferred responsibility should something happen to their community, or blind friends. The average GoFundMe raises about $2,600. That's not going to cover funeral costs, nothing. If you really want to go empower your friends, go empower yourself, I would implore you, go out, go to GoFundMe, and read one of those horror stories, because life is happening to every single person, every single day. And I'm going to give you a real game changer right now. If you haven't written anything down, I want you to write one thing down in your phone for me. Give yourself a grade of 1 to 5. 5 being the best, 1 being the 0, on how comfortable you are with your life insurance policy, to make sure that the people who was relying on you will be taken care of should something happen to you. Be honest with yourself. And if most people, you can vehemently give yourself a 5 that you've done what you need to do. I don't work for State Farm. I am just telling you the significance. I had to pay $13,000 out of my pocket for my father's funeral. 5 years ago, a brother of mine was shot 5 times. My wife and I got married, and the very next day, I got a phone call that he was shot, and I had to pay for his funeral. I'm in the business, and I'm not having these important conversations with the people next to me. Don't waste your time to come to InvestFest, sit here, listen to people get you all excited, and you don't take something material to go change your life. You can be dead broke. Your life is worth more than a drink. If you stop today, here's the truth. If you stop today, the people who rely on you to pay that extra phone bill, to cover this, to cover that, is over. And it is non-negotiable. You are too important. I use the example, I'm sorry to cannibalize this, but I have to, this is so important to me. I use the example of a car seat, driving in the car. Everybody gotta pay car insurance. If you don't pay the car insurance, what happens? We got a problem, right? And then the police pull you over, it's a whole other problem. But the real problem is, that money goes kaput. You hope you don't get in a car accident. All day you hope you don't get in a car accident. But if you do, I got insurance, okay, we good. Well, you're the most important asset of your entire future life in the ecosystem. How do you not protect that? Now, again, this is not me thinking about it. I'm just telling you, I lived it. And it's painful, so it's non-negotiable.
Non-negotiable. Listen, once again, what's our saying? Information without execution is just what? Conversation. We ain't here to conversate. We're here to give people the true blueprint, right? So everything you've heard, yesterday and today, it's not just, people not just up here to talk, right? The idea is to motivate you to say, okay, to elicit something when you leave here. If it is to say, okay, how much life insurance do I need? Boom, let me go actually get this quote, and let me go do it. Oh, I need different ETFs in my portfolio, or I need ETFs in my portfolio, or I need to open that account. These are the things that we're here for, man. And so, once again, information without execution is just conversation, and we ain't here to conversate. So, I got a question for you, right? 20 plus years on Wall Street, what would you say the biggest mistake new investors make?
Good question. I think they allow greed to drive decisions too quickly. Everybody wants to make money. I call it, there are three legs to our want stool. And it is growth. We all want to grow faster. It is stability. We want to grow without any volatility, let things be absolutely perfect. And then there's income. How do we supplement the income from us working? Those are the three legs of the stool that every single person in here wants in some way, shape, form. Ideally, you can have all three if you can have it in the perfect world. But the design of the world is that you will not get pure growth without volatility. You're not going to be able to supplement your income without something, a trade-off somewhere. There's no free lunch. So I think they let greed drive the decisions too quickly, and they don't play the long game. The time horizon, yes, you want to plan. I'm sure all of you plan to live to be 100, but the time horizon is to start early as possible, like you do with your children, like I do with my daughter, like I hope you do with your children. To start early as possible, dollar cost average, stay consistent, and honestly put on your blinders. That is the number one thing that I think everybody here should reprogram their algorithm on social media, unfollow whatever that does not serve you, and restructure how you think about investing.
I think you said something that just made me have to deviate because it's important, right? Like, greed is something that most companies find a way to capitalize on. They market to it. They know the human tendency is to be what? Be greedy. And so when we think about that, right, it's a reason sports betting wasn't around or legal across the country, but now everybody and their mama, you go on social media, certain podcasts and this, that, and the third, you can't watch ESPN without them talking about this parlay, right? It's ingrained in our society now because greed is something that, from a capitalist standpoint, let's market to because we know the human tendency is to do what? To be greedy. And so I even bring that up because, and we can go like, you watch ESPN, they got a bet company, right? Like it's ingrained in our society. But now we're seeing it on Wall Street, right? They just removed the pattern day trader rule. Back in the day, you couldn't day trade a certain amount of times or a certain amount of notional value if you didn't have a portfolio over 25,000, right? Reason being, it's like, okay, this person inherently can take more risk. Now, you got people on, Robinhood, oh, pattern day trader over is lit. They blow up their portfolio. So let's actually, because I want to go back into that greed word because I don't think people understand, implicitly just how we're impacted by greed. And I think when it comes to investing, there's investing, then there's trading. Let's break that down, right? What's the difference? And at what point do you think a person should, start trading after they've invested? I vehemently disagree with anybody that's trading without having a investment portfolio.
Yeah, look, time. That's the only difference, right? Trading is short-term and long-term investing is set it and forget it or structure it and obviously maintain and watch it. I think that's the difference. Most people want, again, they want the high flyers, they want the option trading, they want the volume, everybody boosting their returns, and 70% of those folks are actually losing, right? You just are not in front of the technology, you don't have the scale, so you're competing against 0.72 and some of these large hedge funds. You're just moving too fast in front of you. So I think people get addicted to the gamification of investing. And you guys should, not you all, but somebody like you, should at least think about the long-term opportunities. So your trading bucket should fill your long-term bucket. And if you're taking and consistently have a process, it should fund your long-term investment tools. Like, something, I'll just leave one thing, two resources. Anybody who is looking for more resources on ETFs, there's a website called etfcentral.com. It's a website that I used to run for the New York Stock Exchange. You can see any and all ETFs that are in the market, anything that launches. It's not a plug for me, it is a tool and a resource for you. You can compare ETFs and strategies if you're trading, if you're thinking about leverage. And then you can obviously visit our firm, which is direction.com, but it's spelled Direxon. It's called direction.com, and we are the largest single stock levered ETF provider. And again, I just think you should trade in buckets, but think about your long-term investment vehicles and structure.
You know what I love about, there we go, I like the clown. And I like your outfit. Hey, I thought he was best dressed. He's now second, you first. But look, what I love about investing, right, is there's investing, there's trading. And I think what people don't realize is that when it comes to trading, I look at it as saying, how many people play basketball, right? I still got hoop dreams and I'm well past my prime, right? But at, Lifetime LA Fitness, I promise you I'm an all-star. And I say that to say, when you're an all-star at Lifetime at LA Fitness, you cannot go on the NBA court and play with the pros. There's no difference than sitting at your house on your Robinhood, your E-Trade, your Schwab, and you're trying to day trade against real pros. What I mean by that, these people that literally follow and trade the same names every day for 10, 20 years to the tune of moving $20 million notional per trade, they know exactly the support, they know exactly. And then they got different tricks on how to move it. I know y'all might have heard of this guy Leopold Aschenberger, where, this guy from Citadel was able to take his whole portfolio because he was over-levered. Google that, for the interest of time. But understand that there's real professionals out here. That's why I say, as you trade, make sure your nucleus of your portfolio is long only, right? Long-term, and then you have the ability to trade, like you said. Right now, as we wrap up, give the audience 3 things they should do Monday morning.
I think you should literally go to ETF Central or find an ETF website. It is the most transformative investment vehicle on the planet. I honestly believe that for you all to just access markets. And that's one, so go learn more about ETFs. The second thing is, make sure that you really do a deep dive and look at your estate planning. Do you have a trust? Do you have a will? Do you have a life insurance? You don't need all 3, but you need to at least start thinking about that and be brutally honest with yourself. The last thing is, take time into account. Invest as early as possible and just start the game. I'm local, I'm a normal cat, I hope you feel that, and I'll be around, so I would love to meet and connect with you all.
I love that. Before we go, I need y'all to say something with me one time, man, because I live by this, right? We're going to say it one more time, right? Information without execution is what? Information without execution is what? It's your boy, Ross Mack. This is Maconomics Live, brought to you by State Farm. Give a shout out to